All right, today I'm joined again by John Florick of Emperor Metals, CEO. John, good to see you again.
Good to see you too, Jeremy. How you doing?
I'm doing very well. I'm happy to be seeing you. We spoke a few months ago, and it just seems like over those few months, Emperor is doing all of the right things. The stock's moving in the right direction. Its financings are getting closed. Drill results are coming out. So a lot of good things that I'm excited to talk about today. And I think the key word that I think of when I'm seeing this project right now is focus. And I feel like that's coming across from your team. You're focused on this project. You're focused on this deal. And is that how you're feeling?
Absolutely. I mean, it was a pretty big year for us, 2023. We just picked up the project like in January of 2023, and we did quite a bit of stuff. I mean, we basically built the first ever mineralized model, first ever geological model, and now we have the first ever conceptual model that includes, which was the big revelation in the middle of our 2023 drill campaign, that we have this big conceptual open pit above this high-grade gold deposit at Duquesne West Gold Deposit in Quebec. So yeah, that was a pretty exciting thing to see, because when we were drilling, we started seeing, the host rock. No one really sampled the host rock. They just sampled the high-grade mineralized veins, because this region was traditionally underground mining only.
Hmm.
But with the advent of like Canadian Malartic and Detroit Lake Gold and now Cote Lake Gold, these big open pit mines, people are starting to realize, hey, maybe there's open pit potential on these properties. And so we sampled all the host rock, and we were seeing like intervals of 25 meters of 1.69 grams per ton. When you can mine 0.3 grams per ton, you can basically mine an order of magnitude lower than what you can mine underground. Say you're mining 3 grams per ton underground in a jurisdiction like this. Well, in an open pit, we're mining 0.3 grams per ton, and that's economic, especially
Hmm.
with the gold price. It's increased. I mean, that's another story. We picked this up when gold was like $1,800, and now it's increased by $500 more, the gold price. That's another like $400 million, close to $500 million of in-ground value for this deposit, depending on the cutoff grades, and we're growing it. So that's the exciting part about it is, timing is important in the industry, and this project is looking pretty exciting.
And kind of like you said, you only picked this project up at the beginning of 2023, and things seem to be moving fast and in the right direction. To the extent on your last drill campaign, your 2023 campaign, things sort of evolved in real time, and you kind of went from that underground to realizing during that campaign that you could go to this open pit that you've been talking about. So I guess like now looking back, because you referenced it the last time we spoke, but in hindsight, can you walk us through a little bit more of that? Because I think you went from originally you're going to drill 11 holes and you ended up drilling 14, and kind of how that kind of realization occurred while you were kind of mid drill campaign.
Yeah, so we basically, it wasn't necessarily 11 holes. We wanted to drill, um, it was probably just going to be less holes, but the same meterage. But we decided that in the middle of the campaign, because we saw the host rock was carrying,
Mhm.
that we potentially had this open pit potential. So we wanted our last few drill holes that we had, or 20% of the remaining meterage, to start targeting this near surface stuff. And so they were a lot shorter drill holes, and it's the same meterage, but we ended up drilling more drill holes because of that. And what we were trying to do, we put together these conceptual pits, and we had satellite pits. So we were trying to enlarge the conceptual open pit model that we built. We did some pit optimization studies. We did like a phase 1 pit shell. We did a phase 2 pit shell and an ultimate pit shell. So the focus of the 2023 drilling was basically on phase 1 pit shell, trying to expand that and see so we can increase the economics and see how much the host rock contained mineralization. And it does contain mineralization. So we're excited. What we were seeing from our underground, targeting for underground reserves, having the host rock carrying pretty good grades, we were seeing that in the near surface environment as well, just like we predicted. So I think that was the exciting part about the whole project, was that now we could build ounces potentially more quickly because we have a lower cutoff grade.
That's right. Lower cutoff grade, higher gold price. And we'll talk about this later, but I think your next campaign, you're able to target shallower holes again um, because of that strategy.
Yes, I mean those adding those incremental ounces into an open pit are important because the pit shells that we have right now are economic in today's terms
Mm.
for phase one, phase two, and phase three. But more importantly, it doesn't, those conceptual open pit models that we built doesn't account for any of the gold in the host rocks.
Yeah.
So getting this incremental ounce is going to reduce stripping ratios. It's going to improve the economics significantly. You know, the goal is to try to get this this open pit mined into like probably $900 to $1,100 all in sustaining cost for mining. But more importantly, we there's a lot of interesting stuff about where we're located. We're right in Quebec,
Yep.
and there's like 6 different mills and tailings dams, and potentially we could have this deposit as a satellite. So when you're looking at people getting scared because you look at Cote Lake gold deposit, they you know, I think they went triple the amount of capex expenditures than they anticipated. A lot of people are having that problem with run rate costs after the pandemic. If we view a lot of this stuff that we have here, because we have all, you know, these synergies around us, we could potentially be a satellite deposit for all the existing infrastructure in the area, because these high grade lenses that run through the deposit, we could stockpile that high grade. Like if you're in a porphyry environment or like a Carlin type environment out west, a lot of that, those stockpiles are lower grade, but in the Archean system, you can like mine these higher grade lenses and stockpile higher grade lenses, but you can also stockpile the lower grade stuff. So if you want to optimize your mills, you send the lower grade feedstock to some of the mills in the area. But if somebody's not meeting Q4 guidance, let's say, or end of year guidance, and they have to make ounces, well, having a stockpile of 5, 6, 7 grams per ton, you know, at our mine would potentially be great feed that anybody would want to accept.
Yeah, absolutely. And you referenced it, and we haven't actually explicitly said, but yeah, the Abitibi Greenstone Belt where you're located is, I think it's got 11 producing mines in there, and that vein is super robust and well known. So that this isn't the first time Duquesne West has been drilled, and that's, I think, a really interesting part of this story as well, is that a lot of the information you're pulling on is there was, I think, 100,000 meters have been drilled on this property before, and you, I think, submitted was about 3,000 meters to your first campaign, and you're starting to look at what other historic core can be sent in for assays as well. So walk us through a little bit of that and like a little bit more detail about, I guess, how valuable that is as an asset. Obviously, looking at historic core that one was drilled before under $1,000 an ounce of gold. Now we're looking at 2,300. So that's, like you mentioned, big part of the story. But yeah, walk us through that historic core a little bit more.
Yeah, so deposit was discovered like in 1940, and there's been about 8 different workers on this property. So when the last work that was done on this property was in basically 2011. And think about that. Gold was probably, was it $1,000 or something, $1,100. It was a tough time, you know, the previous workers before, you know, they had to drop the property, they couldn't raise money, but they liked the deposit at $1,100 gold. Now we have $2,300 gold. One of the reasons they liked it, and why everybody liked it in the past, but they always had economic conditions to struggle with, right? Was because some good thickness in these lenses. Like if you just look at our press releases, you know, we were extending some of these lenses, and they were we had intercepts of like 10.8 meters at 15.8 grams per ton. So this is what attracted us to the deposit, is that we knew that we could basically grow this deposit internally and externally, the footprint. So, and add ounces this way. So we introduced like a conceptual 2 to 6 million ounce potential if it was an underground mine. But now that we have an open pit conceptual model, we feel as though, you know, we could get from 1 kilometer to surface, we could potentially build like, you know, potentially 3 or 4 million ounces in that realm. And then extended to depth. So maybe this could have a 10 million ounce potential. And
Well,
like you mentioned, there was 100,000 meters that we're leveraging off of. Um, in 2011, there was no 3D model. It was pretty obscured. You look at these cross sections of the different lenses. It was really hard to figure out what the geometry of this deposit looked like. It was pretty obscure. So we built the first ever 3D model in record time using AI. So we've been leveraging AI technology in this company. This is why we moved so fast in 2023 with all these new models, like even a geology model. We developed that very quickly. And some people they've drilled 400,000 meters on a project. They're at 4 years out and they still don't have a geological model. We did that within a couple of months on this project using this technology. So it is amazing. And so now we build the first conceptual model. And so we have people like, just if you look at our latest press release, we have strategic investors like Rob McEwen coming into. He can see the value. He's actually has McEwen Mining right down the road from us. And he sees the opportunity in this district. He sees how that AI is, how we're using it. He's really, really intrigued. He sees, the growth potential that we're showing and the value and the success that we're having from using AI, that he has an aligned vision with us now. So he invested in us. He took 50% of the latest placement.
And that's amazing. That's a big name. We referenced it at the beginning. You raised 2.3 million. He took half of that. I think it stands now at about, I think the press release said it's 8% of the company. He's operating in the area. So a lot of synergies there. And then without skimming over it, you've mentioned the AI stuff, which was very headline heavy for you guys in the Q3 Q4 of 2023, and it looks like, and you said something in our last interview which was great. You said, this is something that used to take us years to do, and like you said, we're doing it in a matter of months now. It's just really changing the game. So first of all, well done on getting Rob McEwen. That's big news. For those who don't know, he founded a little gold company called Gold Corp. You might have heard of it, a few bucks. And but walk us through a little bit about that process, landing a gold mogul like that into a junior like Emperor.
Yeah, I mean, AI technology is huge, but you need experienced people running it. It's not, you just don't just put data in, it spits it out. You need geologists. It's basically garbage in, garbage out. The geologists really have to go through the database. They have to understand how the programs work in machine learning. And then they have to adjust the databases and they have to have a vision. For us, we have, as geologists experienced in the gold industry, we have certain models that we think of on how these deposits are formed. And we're able to, put that type of thinking into the machine learning, and then it models based on those parameters. And that's what gives us the models that are actually successful. They become legitimate if they're done correctly. They're credible models because we're drilling and we're hitting. So Rob McEwen really liked the idea of how we even did the geological model. Basically, we modeled most of the intrusives because we know that we have competency contracts between the intrusives and the host volcanic rock. We can see the mineralization at those competency contrasts forming in some of the higher grade replacement style ore and robust thickness that are at those competency contrasts. But we're also seeing, mineralization in the intrusives as well, which is kind of unique to this deposit. So it's it's been a real game changer because, like I said, it makes my life easier, AI. It makes my geologist's life easier. People are resistant to it sometimes. I don't understand it because it just makes life easier and you can do a better job than you could do conventionally.
Yeah, I feel the same way. I explained it. It's like getting power tools for the first time. So
Exactly.
I love it. I use it every day, and it's great.
That's a good
So
analogy. I like that.
yeah, we're not, yeah, but so you've referenced you're in a district where there's a lot of other producers going on. McEwen himself. There are some companies in there that your projects you've been. We kind of skipped over your bio. You've been in the business for 30 years, BHP, Barrick Tech, Detour Lake Gold. Eventually some of those projects getting sold to Agnico Eagle. Can you share, are there anybody else that's looking at this property? Are you guys having conversations with any other, parties in the area that could potentially be that feedstock or mill feed that you sort of referenced?
Oh yeah, definitely. I mean, we are in a strategic area of southern Abitibi. We're right between Timmins and Veldora, basically, and we're on to the south of us. So, yeah, it would be amiss for somebody not to be taking a look at us. So we do have other strategics that are interested in what we're doing. We're getting the word out. Like I said, Rob McEwen came in, and others will probably follow. So yeah, we're quite excited to tell our story to people who are interested in what we're doing, because at the end of the day, this mine could be a lot more profitable using the synergies that people are already in the camp. This is also a major camp of Agnico Eagle, right? One of the bigger gold players in the industry.
That's right. Yeah.
So
And so you're starting to get ready for your 2024 campaign. You're planning on drilling, hopefully going to drill
yeah, so
more meters than you did last year.
yeah, that's the plan. Right now, we're fully funded for 5,000 meters. We just got financing, and so that's exciting. That'll probably start happening probably in a month. We'll have drills mobilizing to site, and we'll start
Okay.
drilling. So, and then as we move through the year, and we probably have another additional raise at some point in time,
Mhm.
because we'd want to drill significantly more meters. We'll see what the market does. I don't want to unnecessarily dilute this company if I don't have to, but the plan is that, with the increased gold price, our stock will get a lift. We're trying to get the marketing out there so people can understand, the value of this company. I mean, right now, companies with similar projects are ranging between $50 to $200 million in the area, and we're just above $10 million, $15 million market cap now. We've grown since we last talked. I think we were at $6 million market cap. So our market cap is pretty much double.
Yeah,
So,
it has.
so as the story gets out there, we're doing a good job. Alex Horsley, he's investor relations, corporate development. He's doing a great job getting the story out there, and we're making a difference here with our market cap. So,
That's
oh, sorry.
incredible. Oh, well, no, I was just saying it's incredible. And like we've seen your chart has been moving consistently in the right direction for the last, 4 or 5 months, been, ticking up day in and day out. So yeah, it's doing the right things. And then so hopefully going to get more than 5,000 meters done. You'll do another raise, only take the money when you need, so you're not over diluting. Great strategy. And then to touch back on the historic core, I think I heard a number that you're able to get that assayed for as little as $35 a meter.
Yeah, exactly. We might want to do special analysis on it because we have AI. I've done some geochemical models that really help improve the economics of a deposit. I did that up at Detour Lake Gold. When we send these geochemical models through the mill, I don't want to, it's probably too complicated to get into the details here, but when we sent these new models that we developed through AI, basically you saw a 20% increase in the amount of gold going through the mill. So we broke the reconciliation in a positive way, which equated to about $150 million of additional revenue per year for the life of mine. That's huge because they're producing like 700,000 plus ounces per year. So it's a huge impact. We're doing something similar because it's going to help it out, open up targets. And because I have this flexibility with AI, I want to do what we have been doing, multi-element geochemical analysis. So yeah, we're going to be ranging between $35 to $50 for this historical core because of the additional type of assaying we want to do. And it's also going to help with metallurgy, understanding where the detrimental elements are. So we can give better clarity to investors on the metallurgy when we have an updated mineral resource, which we hopefully at the end of this drilling campaign in 2024, we'll have an update. We'll do a 43-101 report with a mineral resource update. That's the plan, because we know that we've added more ounces because we have this open pit. We can mine a lot lower grade. We need to get this out to investors on what we actually have and how we can grow it. But we gotta create that baseline where we are right now for investors, and then show them the potential moving forward into 2025, 2026.
Right. Yeah, and so that was actually leading into my next question was if you're planning on giving an updated resource estimate 43-101, and it sounds like that is part of the plan. There's still a few drill holes waiting to be released from the 2023 campaign as well, right?
Yeah, that's be coming out next week.
Next week.
Um,
Okay, so
or this week actually. So
just in time for
uh,
this.
yeah, yeah, we pretty much we have all the results are in now, and
Okay.
we'll be submitting a news release out.
Mm,
And so that's exciting. I think, the key thing is you were talking about historical drilling too. We have 100,000 meters on this property. We sampled about 3,000 of it. We probably got what we want to do is we want to sample the historical core that was not sampled. That's the host rock that contains these incremental ounces. We want to go to that host rock and
mm.
we want to sample it. And we probably have about 15 to 20,000 meters that we can probably harvest from the historical core library still. So we're diligently going through that as we speak right now. We're going to start up that program very shortly, along with the drilling, and do that all summer long. So
Mm.
in addition to the drilling, we're probably getting just as much, I guess, free drilling done by going through the historical
That's
core.
that's a big bump. I mean, 15 to 20,000 meters at, you said 35 to $50 a meter. That's pretty significant way to add some ounces to the resource. So that's exciting.
And
And
cheap.
and cheap. I mean, that's the thing, because everything in the world, nothing's cheap these days. So you got cheap meters to submit, then you're winning. And we spoke about it off camera a little bit, just kind of catching up about PDAC and the sentiment in the market. And I think the other exciting thing here, and probably why guys like Rob McEwen are interested, is that as gold is hitting these all time highs, $2,300 an ounce, there's this lag in the juniors. The majors are keeping up a little bit, but there's definitely an opportunity or a window right now for these juniors that are still underpriced when you consider how many ounces are in the ground in some of these projects. It's pretty incredible.
Yeah, I mean, the central banks keep accumulating. I hear like the people in China, they're buying more gold themselves than the central bank of China. So I think that all points towards a nice, robust gold market moving forward. And the way I look at it, I look at things more broadly. I'm not I mean, we have all sorts of issues going on geopolitically, and a lot of our Western adversaries, they don't really want to be tied to the greenback, so they're kind of focused on gold, and so that can only help us. And gold is actually going higher, and I think that's pretty much the sentiment that's happening out there.
Yeah, absolutely. Anytime we have global uncertainty or financial system uncertainty, we seem to run there. And every year it seems like more and more people are opening up to that idea about going back to sound money and hard assets. So
Yeah, I
eight
mean, gold's
billion
been
people.
around for 5,000 years or so. So
As long as yeah, so as long as we've been trading, we've been using shiny objects to do it. So and 8 billion people in the world that are all going to want it soon enough. So you guys got a few ounces you can share with them.
absolutely.
Cool. Well, thanks for joining me. It sounds like there's a lot of exciting stuff going on. There's a lot of great work that's been done. There's a lot of stuff coming down the pipe, a lot of really solid advancements. So congratulations on that to you and the team. I know I've spoken with a few members, and like I said at the beginning, there seems to be a really solid focus here, which is really tremendous. So I'm looking forward to catching up again in another few months, getting another update, because if as much progress is done in the next quarter as was done in the last, I'm sure you guys are going to be rocking and rolling.
Okay, well, thanks for the interview, Jeremy. I appreciate it. Thanks for following us, and thank you.
Yeah, appreciate you, John, and we'll catch up again soon.